Hey traders, welcome to Charts and Coffee. Hope everyone's doing great. Good morning, good morning. Happy Thursday. All right, gang. Good to see everyone. As always, our figurative phone lines are open for requests, so feel free to type in any symbol, time frame, question that you have. The show is all about you. We're going to take a quick run through sort of the market pulse, if you will. I'm going to show you another cool thing that I do in the morning. Another way to look at sort of risk appetite versus risk aversion. That's what we're always trying to do, gang. Right? Trying to figure out: do people want to buy things, or are they sort of hiding out? Is it risk on or risk off? Right? Risk on the table. I'm willing to buy stocks. I'm willing to buy higher yielding, potentially more risky assets. Am I being more defensive? Do I want to buy staples, utilities? Am I kind of hiding out in places where I'm seeking safety, like we saw with the bonds? That's all. It's really that simple. Fear, greed, right? Happy, sad. To me, I find the more that I just boil it down to the basics, the better off I am. All right. Good morning. Good morning. Good to see everybody. Okay. So let's get on with the first symbol of this three. That's a really easy way, if you're stepping back to the market, to take a quick look. And by the way, I looked at these symbols in last week's free video. You can check it out. I believe it was Friday's free video. And then on Tuesday's free video at the Simpler Trading YouTube channel, I talked about hike or hold, gang. That's the big question. Now, while we're waiting, I'll talk about what I'm doing as well while we're waiting. And speaking of kind of some housekeeping here, we're going to go over some symbols, what I'm doing while to see whether or not we're going to wait to jump into the market based on what Powell may do in May. End of quarter is tomorrow. What kind of jockeying around for position are we seeing? How am I going to handle that? And by the way, we have our DPMR Masterclass check-in today. And you can see right there, we're going to be doing it between 2:30 and 4, so 90 minutes. Why am I calling it a check-in rather than an Ask Me Anything or a Q&A? The whole point of this check-in is for everybody who signed up for the DPMR Masterclass. If you have the DPMRs and you took the class with me, Basic, Pro, or Elite, this check-in is designed to touch base, 90 minutes, take your questions, talk about what I'm doing right now, take your questions as to where, since you've had these daily price movement range zones for a month, where are that fine tuning that maybe at this point you're needing to be able to continue to succeed with these. So that's today at 2:30. If you took the class, we're going to be in the classroom. I believe it's the classroom. Yes, the classroom at 2:30 Eastern. 90 minutes before the bell. All right, so let's get to it. 6E, moving higher. What does that tell us? Dollars moving lower. If we're looking for risk appetite or risk aversion, dollar moving lower is usually a good sign of, well, that's better for stocks, right? When we take a look at the bond market, this one's been a tricky one because bonds were that flight to safety during the bank crisis. We talked about that in the newsletter. Those of you that haven't checked it out yet, we have a reboot of This Week in the Market, and there'll be the second issue going out tomorrow afternoon, I'd say. So second issue is going out tomorrow. First issue was about notes, banks, currencies, a lot of what we're dealing with right now. So second issue coming out tomorrow. If you haven't checked it out, you can. ZB is moving lower. That means yields are moving higher. That's a mixed picture. Because typically, and the sort of harmony, the synchronicity we want to see is that the dollar is moving lower while yields are moving lower. And we don't see that structure yet. It means there's still some confusion in the market. A little bit of a heads up, right? And then finally, a really good way to understand what the indices are doing broadly, kind of look at the combination of what the Dow and the NASDAQ are typically doing. And that's going to be our S&P moving higher. Gang, we've talked about it for a while. We talked about it in the bank crisis newsletter. We've been talking about it in the mastery. We've been talking about it in the futures room. This is not a game of chicken we play with the Federal Reserve. We may question what they're doing. We may not agree with what they're doing, but do not underestimate their ability to step in and calm the markets. They've been doing it since 2008 easily, right? So that's where we are. It's tough to want to bet against this market. It's tough even more specifically to want to bet against tech. Think about end of quarter, gang. End of quarter means what? It's report card time, right? And I mentioned, what am I going to do between now and end of quarter, which is tomorrow, and between now and say May? What is going to be one of the emphasis? We do this every morning, anyways, in the Sector Secrets Mastery Room, and that is day trading, right? What is day trading? Let's be really obvious about this. Day trading is opening up that 5-minute time frame, throwing those hourly price movement ranges on the chart, and then asking ourselves, what is it that we can react to in a trend, in chop, etc. Now take a look at something really interesting on the day trade of the NASDAQ. For those of you that have the hourly price movement range, this is a volatility-based tool, which nobody can see this, right? Most people don't even know they could measure volatility, forget plotted on a chart. What's really cool about this, and we have an uptrend. Those of you that have the multi, that green band across the bottom, this is the multi. How do I know I need to be a buyer? How do I know I need to focus on the long side? Right there. Gang, we weren't even up, but around 115, that transition to a neutral yellow trend to green occurred. Now, what do we know? Really confident. Buy only. Much easier to be a trader when we know which direction we are looking to trade in. Not, can I be long or can I be short? That's an awful feeling, right? Okay, if I know I'm buy only, take a look. Most of you may not have ever noticed the dashed lines on the chart. I mean, they're kind of hard to see. But those of you that hourly price movement ranges know this is the least amount of price movement range that we could see per hour. And we've just been climbing along that level now since, well, about 1:15, 2 a.m. this morning. And so that's a really cool way to say, hey, we're just surfing the wave, green grab candles, surfing the least amount of price movement range. So pretty low on volatility right now. And obviously, for now, quite bullish. Why would NASDAQ be up? Tech has been strong, gang. And if tech is strong and we're going into end of quarter, you better believe when we're going into that end of quarter report card, and the reason I call it a report card is what's happening right now. If you're managing money, you've got to show the people that you've been managing money for, you put them in the right place, in the place where they're best poised to make a return. And is that financials? Probably not. Meaning regional banks? Probably not. Is it tech? Is it semiconductors? SMH was in fuego yesterday. You better believe these are going to continue to benefit as we go into end of quarter, meaning tomorrow. All right. So let's see. Hey there, Ann. Hey, I appreciate that. It's a tremendous insight into the markets. And I appreciate that, Ann. I'm going to continue. We're going to actually talk a little bit about seasonals. So a lot of folks have been asking, Rog, what about seasonals? Especially when it comes to natural gas. Can you show us some insight into that? Yeah, in this issue, we're going to talk about all the symbols that we talked about in the last issue. We'll talk about our game plan. We'll talk about the story of the week. I'm going to start to introduce some seasonals into the mix as we go into Q2. So we got a great issue in the works for you all tomorrow. Okay, first question here of the morning from Jet Jockey, who asks, building portfolio, do I have to look for a yellow trend and a low stochastic? Hey, Jet Jockey, that's a little too inside baseball for it, only because that could be the rest of the show, right? And I appreciate the question, but since you are a member of the Sector Secrets Mastery, we get together every Tuesday for our recap, weekly chart breakdown, and our macro. We'll dive into that. But as a general answer, the answer is no. I don't need to have multiple time frame confirmation. I don't have to necessarily have a pullback. There are certain things that I will look for. But, when we get into, and so really the best way to deal with longer term portfolio is, you got it, weekly time frame, not daily 1 hour, not DPMR. Nope. Weekly time frame. I can use the daily and the DPMR for a little bit of insight, for a little bit of fine tuning, but the base of it is built on the weekly. And those of you that took, by the way, the DPR masterclass, like yourself, my friend, on April 5, I think it is, we have our long-term session still to come. So I love the question. Let's tackle that next Tuesday because it's a pretty in-depth answer. And of course, we've got our deep dive for the DPR masterclass where I talk about how I manage portfolios with weeklies and other tools that you had with the DPMR toolkit. I believe we're going to do that next Wednesday. So just about a week from today. All right. So moving on to, let's see what we have here. Hey there, Christian. Do I check news on stocks I want to swing trade? Not on a regular basis. I'm not. The only time I'm going to wonder what the news is, my friend, is if there's a significant move. So case in point, yesterday the SMH went absolutely crazy, right? We could see that we had a larger than normal candle. If I look at the previous candles on some of these stocks within the SMH, we had a pretty large candle. We had a pretty significant move. And that corresponded the other day with an upgrade in semiconductors, right? Did all of them benefit in the same way? No, but it definitely got my attention, some of the action that we saw. So I will look at things like that. If there's an unusual move on the price chart, then I'll look at news. So I'm not going to start with news and then go to the chart, because remember, once the news is out, the move has been made. So I'm not looking to trade news. I'm only looking to see if there was a significant price move, what news will accompany that move, right? I think a lot of traders like to trade the news, which is to say they start off with a news feed, then they go to the stocks mentioned. And I actually find that not productive. Yeah, I think a lot of us start that way, but I'll do it the other way around. I'll let price action be what piques my curiosity. Great question. I appreciate that. All right, Jack, good morning. Would ZB, all right, let's jump on over to ZB. Would ZB at 128.09, which is a 50%, be a potential buy area? 128.09. Well, you know what? 128.09 lands right within, Jack, the DPMRs. And it's actually about halfway down, about a third of the way down. That level would, for me, be a daily price movement range volatility buy zone. And specifically that zone today is 128.15, 128.15 to 127.20. All right. So you're 128.09 right in there. So yes, but we could look at that entire zone. All right. Next up is Raphael asks, SPY, is it a buy at this level for a swing? So it depends on which time frame, right, Raphael? And it depends on how you want to build out the SPY. Remember, we actually have 4 flavors of S&P. We have the touchstone, which is the ES, right? And then we have alternatives to the ES, like the micro futures. Then we have the SPY, the ETF, and of course, the ever popular SPX, right? A lot of folks love to trade this. Would it surprise you all to know, it really doesn't matter which one you trade. It really doesn't. I know SPX right now is extremely popular, but the fact of the matter is, however you trade the S&P, the best way to understand what's going on in the S&P is to look at the nearly 24-hour nature of the ES futures. It takes a 1-hour break. It's liquid for nearly 23 hours because if we're not trading it here in the US, it's being traded during the Asian session in all those financial centers, then the European, then the UK, and then back over to the US, and round it goes, starting on Sunday evening. So it's the most complete view of the S&P 500. Is it a swing buy? Well, first of all, swings for me have to be in a trend. So that means I'm looking at the ES and I'm asking myself which one of my time frames has a green trend. Right now, it is only the 1 hour. So the 1 hour could be a potential buy the dip, which is really what a swing trade is for me. Swings aren't necessarily a length of time. I know a lot of folks look at swing trading as this window of, say, 1 to 3 days. I think a swing trade on the lower end of the spectrum of time horizon, is about 2 to 10, right? And that's the window we're in. Right now, that window is even smaller, 1 to 3 days. And therefore, now I know the time horizon, but that's not what makes a swing trade a swing trade. What makes it a swing trade is the price action. Buying of the dip, to me, is synonymous with a swing trade. So on the 1 hour, yes. All right, thanks for the question. Entropic, how are you? With your tools, how do I look for longer term investments? I look for structure like I would with anything else. And you didn't think I'd be able to answer all that in charts and coffee, did you, my friend? It's only a 20-minute show. But how do I look for longer term investments? It's everything we talk about here in the show. What's the structure? One thing I will tell you that's really important, I like to see price action above the 200 on the weekly. That's a really big part of the scan, right? And then I want to find things that are neutral or bullish. So it really comes down to two of my favorite tools. If you want to start with some basics, the foundation, and frankly, some of the most important. Are we above the 200 propulsion? And is my multi-trend yellow or green? And that's really the foundation. Hey there, JP. Can we take a look at URA on the weekly? Oh, sure. Okay. So let's go ahead and take a look at the weekly chart in URA. Oversold 200. I'd keep an eye on that one, JP. Yeah, I'd definitely keep an eye on that one. And Entropic, that's a pretty good look at one of the setups that I would look at, right? Above the 200, at or above, neutral environment, oversold stochastic. Yeah, JP, I would most definitely keep an eye on that. But let's also, JP, talking about automated support and resistance. That is absolutely so important. We've automated the 200. There it is, right? The 200, which is an 8 by 200 cross. That's why it's sort of a smart, right? See, it stops and starts. Just kind of a self-correcting, smart exponential moving average. And then we have our Darvis 2.0 right in here. Now, both these tools, gang, both these tools are absolutely part of the DPMR. They're a big part of what we do in the mastery. And JP, yeah, we're finally here. I like it. I like it a lot around that 200 and actually in the zone between, call it 1920 and 1770 specifically. All right, next up. I love that everyone's talked. I love that we have some questions and everyone here is open to different time frames. Right now, gang, it's going to make a lot of sense to be nimble. Let's day trade. Let's throw those hourly price movement ranges on our chart. Let's use the automation of those zones. So when you're looking at a chart, like I was showing you the NASDAQ and the S&P earlier, all those zones, right, are right there on the screen. And by the way, it's not a lot of zones. This is how clean and decisive this is. I don't need a lot of lines to know what's going on. I have my low, I have my average, I have my high. That's it. 3 things. And by having a minimal amount of things to the upside and to the downside, I can place alerts and I can also wait for price to reach those levels, knowing that it's not just price-based, it's price and volatility-based, right? So that's something else we can do. So as far as Cisco goes, let's do that same approach there. All right, Cisco, moving higher, buy the dip, Gypsy Jones. Gang, I know a lot of us will obviously see when names are, moving higher. But remember, do I want to buy into new highs, especially in a trend? Do I want to buy into new highs? If you follow me here in Charts and Coffee, if you follow my work, the free videos, just the free videos even at the Simpler Trading YouTube channel, determine the structure, which is bullish on the 5, bullish on the 1 hour, neutral on the daily. If it's in an uptrend like the 5-minute and the hourly are, buy the dip. I will not buy into new highs. Yeah, I will not buy into new highs, but it definitely gives us some cool trends to keep an eye on. All right, gang. So again, little housekeeping today. Anyone and everyone who took the daily price movement range, the DPMR masterclass, today's the check-in. Get those questions answered. You've had the indicators for a month at this point, and we want to check in with you, take a look at what the markets are doing with them, and have a great session. If you still want to join us, gang, you can, because right now it's the only way to get the daily price movement ranges, which is my tool for swing trading. As always, gang, thank you so much for being here for Charts and Coffee. We'll be back, same time, same station tomorrow. All right, gang, be good to each other.